Hello, my name is Tim Kraus with Kraus Accounting Group. Over the past 3 years, I have helped my firm acquire 4 different accounting firms here, and I've seen basically your firm has 3 end games, whether you like it or not. You have an option of selling, of closing your firm, or sadly this one is chosen a bit too often, dying at your desk. Well, on that positive note, let's get right into this whole talk here, talking about these 3 different exit strategies that people have, or exit situations that might not all be strategies, and who the players are involved and how this impacts you. So, as an accounting firm owner, it is ironic, but also not surprising. But a lot of accounting firm owners are great at advising their clients. Client advisory, even if you don't actually have a CFO practice, all of us do it to a certain degree. But unfortunately, we are strangely bad at advising ourselves on what we should do, especially when it comes to exits. So if you don't choose an exit, the exit will be chosen for you. That close or die at the desk option are out there. And the default path, which is typically dying at your desk, is one of the messiest paths. We actually worked with a owner, didn't actually die, but had an injury that made it so they weren't able to move forward. And it is definitely a messy path. We're able to work through it, but it's not the best. So some fun statistics here. In a survey of solo firm owners, roughly 35% plan to sell. This is planned, keyword there. 37% plan to merge, and 28% planned just to close the doors. But less than 10% have actually reported a practice continuation agreement, which is actually moving forward and actually selling their firm or doing these first 2, even though they planned to merge and planned to sell. Roughly less than 10% actually were able to continue forward, and that's pretty typical for business selling numbers. Roughly only about the average is 8% of businesses actually do sell. The ones that or even get listed for sale, that's not even just dying at the desk or closing. A lot of people will try to sell first, and then if they can't, then they will close. But it's not a lot. So within a firm, you have 3 main stakeholders that I'm going to talk about today. It's not just you, even though you are, as a firm owner and a firm seller, one of them. It's not just you who's involved. So these are the 3 stakeholders, and this is the very common no real plan of their firm. You have your spouse/family, and then you have your client. So if you don't have a spouse or family, you still have clients. So this is a really, really hard one for many reasons when you're at your desk. Because what happens here oftentimes is that a lot of a business owner's wealth is tied up in their business. Just statistically, it's just true. So with that being the case, when you die at your desk, your family, your spouse, just goes like, hey, what should I do with this? There's been posts I've seen on Facebook groups of right before tax season. There was a CPA who died, and he had a EA friend who was at capacity. CPA had 300 clients, and now the wife is trying to sell the firm, the 300 client firm. But her husband in this situation is already passed, and probably a solo operator. And a lot of solo operators, because they don't prepare for the exit, keep everything in their head, which makes it ridiculously hard to have any value to really try to sell. We've worked with some sellers who have it all in their head, and it is a long process for us to be able to get to the point to where we can actually make it useful, get everything out of their head, to be able to continue the company without them. So the family in this case definitely inherits a lot of chaos, and they're all of a sudden forced into selling an accounting firm or selling a tax firm. And rarely does that turn out well, unfortunately. The clients, once they find out about the passing, basically scatter. they go everywhere, which is fine. Clients will find another place to have service. We are a service provider, and they still need the service whether we are around at the desk to work it or not. But they're not able to evaluate if their next advisor is any good. This is something that you, as the seller, knowing them, knowing what they're looking for, you can see. And if you choose to want to sell, you can evaluate your potential buyers and hopefully determine if the buyer is going to be a good fit for your clients. Incredibly valuable, incredibly important. So, if you don't plan your exit, your family becomes the transition team. They didn't ask for that. Very unlikely is your family, unless they are business brokers who want to help transition your business. Now again, we've helped people in a situation very, very similar to this, and the family's done a great job. The family has stepped up big time to help with the transition, but it's still not what they were looking forward to. Another one here, or close or turn out the lights. Very, very common, even in the survey. Out of the 3 groups that were surveyed, there was the selling group, there was the merging group, and there was the closing group. No, I don't know if they had on the survey die at the desk being one of them, but this is very, very, very common. Selling. So one of the firms we bought this last year tried to close at least one time 7 or 8 years ago before we ended up buying their firm. And it does sound simple. You let everyone go, you let go of some employees, but it is very hard logistically to be able to all of a sudden start saying no to all these clients and start pushing them all off. You have to basically put up a stone wall and, hey, I'm just not doing this anymore, and you have somewhere else you have to go. So this is really not fun. The family does watch you go through a very hard time as you do this. It's not fun. Also, there's no financial upside. You built this business, you built this client list, if nothing else. You can sell a client list. We buy referral lists, not referral lists, but we buy connections with accounting firms who have a list of clients that they want to refer, and we work out deals with those. But there's no financial upside in just closing. There's no benefit to your family. It sucks. It is very stressful. And the clients are still forced to scramble because when you say you're going to close, they say, okay, great, close for everyone else, still do work for me. I'm sure you know the clients you're thinking of that will think that, because 100% they will. And if you give notice to them, they'll still be surprised and blown away when you do that. It just is what it is. The one firm we bought, they were telling their clients for years they wanted to retire, but they still had tons of clients because they just didn't believe them over time. And so now we're going through that transition, and yeah, some of it is bumpy, but the clients will think, hey, you're going to close, but not for me. My first firm that I bought, by the way, it was funny. We had 30 or so bookkeeping clients that we purchased, real estate industry, and we had a few reach when we made the announcement, hey, that we're taking over. We had a few reach out to the seller directly, say, okay, congratulations on selling, but we're still going to do work together, right? And it's like, nope, we're selling. So that's very, very normal. Closing is exit, but it is expensive in the fact that, 1, it is stressful. Number 2, in the fact that you have this firm or these connections that are worth money at the end of the day here, and you decide to make it worth nothing. It's still work one way or another. So this is why I would recommend the third option. The sell or the merger. Okay, this gives you your best shot at converting those relationships into actual value, actual dollars and cents here. Okay, it does if you, I have a video on multiples, if you want to go over the video on multiples, on basically price versus terms, the things you do to help improve the value of your business before you sell it, so that you can build to sell, shouldn't be read. So you can build to sell, and then for us buyers out there, we could buy to build our business. But this can require, and I mean require is a strong word, it is best if you have clean workflows. Clean books are okay. We can work through dirty books. We're accountants. Or people buy them are accountants here. But transferable relationships. Circle this one, underlined it. That's a tough one. One of the ways you can, if you have employees, to make a transferable relationship is start transferring those relationships now to employees. We've talked to some accountants, we ended up not buying their firm for this situation, where you have all of the clients, okay, those are the circles here. Then you have the owner, okay, this one right here, and then you have the accountants that are under the owner, right? You got a couple accountants. Usually, how it should work in a perfect world, is the connection would be between these accountants and these clients, and then it would go like this. But that's not how this went. Now there's always some sort of crossover, but that's not how this went in this particular firm. I'll make it in a different color here. All of the relationships were done by the owner. And these little guys here, these two accountants here, were just the assistants. Hardly emailed with the clients, never did reports with the clients, weren't on meetings with the clients, weren't the main point of communication. It made it impossible to want to try to buy this firm because the person who wants to sell is obviously the owner up here. And if they're gone, the firm has basically nothing. So start transferring those relationships down at least to your employees. That way, when you leave and someone else comes in, then now you only have to worry so much about these relationships here and not every single client relationship. Because for the most part, if the clients have a relationship with your employees, they just want to know who they have to email the receipts to, or who they have to talk to verify payroll or to confirm hours. So that's their main thing. So, selling or merging, oftentimes you're going to be selling with some form of seller financing, especially a smaller accounting firm. And this provides predictability, payout expectations, and less crisis decision making, because in general, unless something dire has happened that is sudden, that's acute, you can have a more long-term transition period. So, and also this creates a real afterpath. I have many accounting firms that have sold and talking with the owners, and they're retired now or doing different things or doing different industries. And you can get there. It does take longer than obviously dying at your desk. That happens instantaneously, hopefully instantaneously. I did work for 3 years in private ambulance. We don't need to get into that whole era of my life right there. But this is definitely the most valuable one you have here. Also, you have your clients, the third party here, and they keep getting served. Now, it won't be potentially the exact same service that you did, because all of us are unique in how we do things, but they still keep getting this service. And depending on kind of how much of this transition piece you've done already, they can have a relatively smooth handoff with few surprises, especially if you have good documentation about your engagements. Please have engagements so that you know what services you provide which clients, when you bill them, and at what frequency, and how much. Ask me how I know that that's an important issue to make sure you have clarified. So, I digress. A good sale isn't just about that transaction, because all accounting firms are a relationship business hiding behind a spreadsheet. It is a client transition for all of the clients. And when you buy an accounting firm, for the most part, especially if the relationships are down in the clients, you are transitioning every single client. Or if they're only employees, you're transitioning every single employee, because everyone's free to choose their own decisions what they want to do. So in conclusion, every firm eventually reaches its final chapter, one way or another. But you're the only one that gets to decide how the story ends ultimately. Whether you choose to sell, merge, wind down, an intentional plan transforms a moment of high stakes, which is transitioning out of your business that you've been in for years, into clarity and value. Your family, your clients, and your own peace of mind deserve that transition that honors the decades of work you have put in. It's time to stop advising everyone else on their future and really start securing your own, thinking about your own, structuring what it's going to look like for someone else. And yes, hopefully, I mean, best case scenario, hopefully you could sell it to someone who's inside the company. Man, does that not happen very often. Because in general, the person who's willing to sit behind a desk for 10 or 20 years as a accountant or a tax preparer is usually not the one who's willing to run an accounting business, a bookkeeping business, a CAS business, a tax advisory business, a tax business. They're usually not the same people. And you know that. But sometimes you can get lucky. Anyways, have some real thought and intention about what it's going to be when you close your firm, because it's coming one way or another. I'm thinking about this a lot for myself, about how can I bring in clients that from the start, in the sales process, I could have this connection with my employee and the client right out of the gate at the onboarding call. I'm doing the introduction because I'm still involved in sales for some of our locations here. I'm doing the introduction and then boom, right to the client manager for them to be able to have that connection, and they are the main point of contact. I'm only brought in for when things are big, broken, or new. That's it. Think about those sort of things. Anyways, if you would like to potentially consider selling your accounting firm, or if you have a list of clients you would like to downsize, please reach out. My name is Tim Kraus with Kraus Accounting Group, my own name, and we'd love to talk with you some more. You can watch some more of the videos here on the channel. You guys have a great rest of your day.